It's 10 a.m. right here in Lagos, Nigeria. Good morning and welcome to this another episode of Business Morning. You know, it's 55 minutes of very relative and current business talk. That's what we're going to do here. You're welcome to the show. I'm Ini John Mekwa. Well, just before we delve into those conversations that you'll be looking forward to, let's talk about the success of Africa Free Trade Agreement, which is being hinged on the robust cooperation among member nations in ECOWAS sub-region. And this is a consensus that was reached yesterday by stakeholders at a roundtable on cross-border trade in West Africa. It was organized by economic think tank, the Center for Promotion of Private Enterprise, CPPE. The Chief Executive Officer of CPPE and representative of the Minister of Industry, Trade and Investment, they both believe that heads of ECOWAS member countries should commit more to economic integration.
We have quite a number of people that trade across the sub-regions, and they have been throwing up a whole lot of issues. Issues around the multiple checkpoints, issues around arbitrary tariffs, issues. So the whole idea is to aggregate these issues, use them in our process of evidence-based advocacy. You know, and this is the outcome of this is something that will be transmitted not just to the Nigerian government, but all the governments in the sub-region. So it's a continent, it's a regional thing. It's not just a Nigerian thing. And we believe that if you're able to do that, it will be much easier to leverage the opportunities presented by the African Continental Free Trade Area.
We need to have good policies, and they need to be implemented. And as you know, the implementation is not by one country, it's by all countries. So we have to work collectively at national level to make sure that we have the right policies to promote businesses here. And at the same time, we work within the ambit of ECOWAS to ensure that the various ECOWAS protocols on trade across the border they are imposed, and everybody is respecting the protocol. So this, in our view, is the way out of the current challenges that we are having when it comes to cross-border trade.
Now let's delve into our first conversation. Now it's exactly 1 month since Russia invaded Ukraine, putting distortion on the relative peace and economic stability in the region. While other countries in the West have not engaged Russia and the war in Ukraine, they've not been directly engaged in it. But it seems that economies are actually at war following the economic sanctions and the repercussion on not just European countries or the UK or the US, but every country, including Nigeria. This is to show that the world is one global village. Everything and everyone is connected. Well, Russia and Ukraine produce about 30% of the world's wheat consumption, and Russia supplies about 45% of gas required by European countries. That's why we've been hearing a lot about wheat and gas and, of course, other commodities at this time. But let's see how economic components have responded in this 1 month of war. We have Oluwole Adeyeye. He is a research associate with Pan-African Capital Holdings. It joins me now for this conversation. Hi, Oluwole. Good morning.
Yeah, thank you. Good morning.
Good to have you. So 1 month after the war, and we see, one of the most volatile movement has been in the oil space. So we see that crude oil went from being about $99. This morning it was above $120. And of course, this comes at a price.
Yeah, I think for me, we actually we need to look at the impact on Nigerian economy, and we have to look at the mixed impact on the Nigerian economy. One has to do with positive impact, and also the second has to do with negative impact. When we look at the positive impact, since Russia's invasion of Ukraine, the price of crude oil has actually increased by 22% to about $120 per barrel as at yesterday, like you said. This is actually good news for Nigeria.
Okay.
This is actually good news for Nigerian economy. And then
is it really good news for Nigerian economy when we cannot even meet up with our quota?
Yeah, I'm actually talking in terms of price now. in terms of price, what we actually see is that Nigeria will benefit in terms of increase in oil revenue, and also it's really going to have impact.
That's what I'm saying. I mean, if we're going to benefit from oil revenue, we have to be able to have the crude to sell. But our quota has been dropping, our production has been dropping.
I think Tony Elumelu actually mentioned something about the oil theft recently in Nigeria. So I think government is actually working on that part for me. And then when we look at the price, you know, the revenue has to do with price and also the quantity. When we look at the volume and the price, in a way, the price should be able to actually override the lower reduction in price, because the price is currently trading at $120 per barrel. And the last time we actually achieved over $100 per barrel, that was in 2014, when we actually crossed the $100 per barrel threshold. Now, there is an impact on foreign reserve, and also there is an impact on oil revenue. Then when we look at the oil sector is currently in recession now. Then when we look at the increase in the oil price, the fact is that the oil sector may likely exceed recession in 2022.
What do you mean by the oil sector is in recession? The
oil sector actually declined persistently in the first quarter, second quarter, third quarter, and fourth quarter of 2021. So oil sector is currently in recession. Why not?
Are we still in recession with prices hitting 120 and above?
Yes. The oil sector is actually in recession. The only sector that is not in recession is actually the non-oil sector, which has been helping the economy to actually grow in the past few quarters. And then when we have to look at the negative impact of this Russian and Ukraine crisis on our economy. Nigeria actually imports refined petroleum products from other countries. And what it means is that the landing cost of these refined products have increased. When you go to the market, you see the increase in the price of PMS, also increase in the price of AGO, which is diesel, the increase in the price of gas, and also kerosene. But most people are not really feeling the impact of the increase on PMS, because government actually subsidizes this. One thing is that you cannot eat your cake and have it. It's not possible. So which means that the government will have to pay higher subsidy for PMS, which is not good for us. And when we look at the price of diesel has increased as high as 800 naira per liter. This is also not good for our economy, because most manufacturing companies will have to pay more to actually power their plants and also to power their generator. I mean, most companies as well. So the effect on this would be on input cost generally, which will bounce back on inflation. So for me, I think we may likely see increase in inflation going forward. And that is just one part of inflation. We have another part of inflation, which actually has to do with imported inflation. The price of goods has actually increased globally. The price of wheat has increased by about 20% since Russia's invasion of Ukraine. And what it means is that it has affected other grain prices as well. The price of corn has actually increased significantly.
And then, you know, when these prices increase, it doesn't just end with the increase in the price. It also affects, you know, the derivatives, the products that are derived, you know, from that.
Nigeria actually depends so much on wheat, because you can actually get noodle, you can get pasta, you can get bread, and also you can get flour from wheat. And since Russia and Ukraine actually account for about 29% of the world's of the global total wheat, what it means is that because of the crisis in Ukraine and Russia, so the supply has dropped.
Why can't we produce our own wheat?
I think we need to give the Apex Bank some credit for their intervention in various sectors. Even before the pandemic, they actually did well. We have some intervention programs in different sectors of the economy, which some companies actually tap into that. And one of those companies is actually Flour Mills of Nigeria. They've been able to embark on backward integration, which means that they now have a line of local wheat production, which is actually good for economy. So I think in terms of domestic production, we actually need to give some credit to the CBN for that, and also to fiscal authority. They've actually done fine. And that is why we did not really have a negative impact like that during the COVID-19, because we were actually a little bit self-sufficiency in some grain, like rice. We had lake rice then. So
no, we don't have it anymore.
Yeah, we don't really have it. I can't say we don't have it anymore because I don't have any data regarding that. But I think if what this actually shows is that it actually creates a lot of opportunities for a lot of domestic players to actually invest in wheat production, in corn production.
When you say opportunity for local wheat players, what do you think is stopping them? I mean, we're talking now about boosting the non-oil exports, and of course, the agro sector is a major part of that. Yes. But we have some factors that seems to be hindering a faster movement in that area. You have the issue of the movement, logistics, transportation.
Insecurity as well.
Insecurity, middlemen. So I guess sometimes it sounds easier to say, oh, we need local players to go into the wheat scene, since it's a major one at this time. But really getting people to go in there is another conversation.
Yeah, I think you are right. When you are looking at the insecurity in the country, particularly in the food-producing states in the country, but when you look at over the past few months, there is some relative calmness in food-producing states in terms of insecurity for now. So I think what I actually think is that we can't say because there is insecurity, there is logistic problem. So I think what we say is that government actually needs to work on infrastructure in the country to actually support the growth of this particular business. But what I actually see is a lot of opportunities. You can see Dangote doing fine in terms of the new fertilizer plant.
So you say that from your perspective that things seem to be calmer now when we talk about food security. So that means you agree with the CBN governor that in a short while we should see a tapering of food inflation. Do you see food inflation tapering soon?
Like what is really going to happen, I've mentioned it earlier, like we can't be looking at food inflation from the supply side only. We also have to look at the imported inflation. Nigeria is actually import-dependent country, which means that we depend a lot on raw material from other countries. And the prices of this raw material and some finished products from other countries have actually increased due to increase in the price of energy. So what it means is that the price of input has increased generally, and the price of some finished goods that we are getting from UK, US, and some other countries have increased.
How much impact is the hike in interest rate of the US? How much impact has it had on that?
Actually, for now, before the Russia and Ukraine crisis, it was supposed to have significant impact. But because of the crisis, it may not really have significant
So you're
impact.
saying that the war in Ukraine has more impact now?
Has more impact
over
now because
inflation and more than the interest rates and the inflation.
Now, when you look at the inflation figure for last month for US, inflation rate is about 7.9%, which is the highest since 1982.
UK too is the highest in 30 years.
In 30 years. So what it means is that they are now battling with inflation because of the shortage. So increasing the Fed rate by 25 basis point may not really solve the the problem for now. So I think what is really going to solve the problem is for Ukraine and Russia to actually put an end to the war. So
more like Russia, you mean? But how do you see Nigeria hedging against all of this? Is there a way to protect ourselves as a country?
I think for me, it's actually difficult. It's extremely difficult for Nigeria to actually hedge. The fact is that we are not, in terms of self-sufficiency in food production and in production of some other things, we are not really self-sufficient, which is not really good for us. So I think we have learned a lesson from this, which actually means that we need to actually develop our own economy as well, so that we can encourage export to other
because I wanted
countries.
to ask you, what lessons, apart from Nigeria, what lessons do you think the world can learn from this 1 month into the war? What lessons?
I think what lesson we can actually learn is that when we have capacity to do some certain things, we should do it. Let me focus on Nigeria. Nigeria actually, they produce crude oil within the country, but unfortunately, we have to import refined petroleum products, which is not really so good for us, because we can actually have refinery within the country.
We do have refineries, just that they're not functioning.
So, which means that if we cannot export our crude oil to other countries to go and refine and import back, then we not be able to do anything at the end of the day. So that is a lesson for Nigeria. And for Egypt, which actually imports...
Egypt seems to be in a dire situation now. I read they're reaching out to IMF for help.
Yeah, actually, Egypt imports about 70% of their wheat imports actually come from Ukraine. And you know, Egypt actually depends so much on wheat. So what it means is that there will be food shortage in Egypt. And what
their bread is already being subsidized. That's a fixed price now.
So what we should be expecting in Egypt is probably high inflation rate in Egypt. And also, we are already seeing the impact in Nigeria as well. The price of bread has increased by about 20% in the market. So I just feel like what we need to do, whether US, whether UK, whether Nigeria, whether Egypt, we actually need to have some level of self-sufficiency if we have the capacity to actually do so.
Doesn't that undermine the issue of being a global village? The world is supposed to be a global village, interdepending on each other.
Yeah, I got your point. I meant something about the capacity. When you have the capacity to do some certain things, like we don't really have that capacity to produce some certain crop in Nigeria. So in that case, we can actually get it from other countries. But we have the capacity to produce wheat and also to refine our crude oil within the economy.
All right. Thank you so much, Oluwole Adeyeye, Research Associate with Pan-African Capital Holdings. Thank you for sharing your thoughts with us this morning.
Thank you for having me.
Great.
Yeah.
Crude prices declined today in volatile trading as investors assessed the potential for new supply in the tight market amid prospects of a new Iran deal. Brent futures were down 58 cents at $121.02 a barrel, and U.S. West Texas Intermediate futures fell 96 cents to $113.97 a barrel. Both contracts rose $2 and $1 respectively, and that happened in early trade. White House National Secretary Advisor Jake Sullivan has said that the United States and its allies have made progress in Iran nuclear talks, but issues still remain. A lifting of Iranian export restrictions would help alleviate the immense tightness prevalent in the crude market at the moment. Iran is already preparing for a ramp-up in exports, and the state refiner has reportedly started to reach out to former key customers in India and South Korea. Oil markets jumped more than 5% yesterday following reports that crude export from Kazakhstan pipeline had completely halted following a storm that damaged it. Russia's Deputy Prime Minister said that oil supplies could be stopped for 2 months. Well, we'll talk about oil and, of course, some other commodities in the global space and, of course, in the Nigeria space. We'll talk about that with Longida 4. Longida 4 is an analyst with a financial derivatives company. Hello, Longi. Good morning.
Hi. Good morning. Thank you.
Good to have you. Second time this week.
Yes.
So oil prices this morning has hit like 122. So That should be good for Nigeria. But I mean, let's look at it from the global space, from what's going on. We see U.S. seems to be inching close to sealing a deal or settling the matters with Iran. And that obviously would affect supply and price eventually.
Yeah, definitely it should. The prospect of the Iran deal actually pulling through would be very beneficial for the market. As we know, the market is currently experiencing huge bottlenecks and extreme tightness, more than we've seen in a very long time. And this Iran deal actually coming through would very much help to alleviate some of that tightness that we're currently seeing. And actually, apart from that, what is actually really pushing the markets, of course, we know is the overarching narrative of what's going on in Ukraine and Russia. But most recently, of course, we had the Kazakhstan pipeline halt, and that's also causing issues and the market to jump up recently. Also, as well, U.S. crude inventories declined last week by about...
What happened?
I think about 2.5 million barrels. Crude inventories declined. And also our crude reserves also declined by about 4.5 million barrels. So obviously when we have inventories declining while U.S. Production is steady by about 11.6 million. The only thing that prices can do is go up. So that's
and the U.S. seems to be feeling this pinch a whole lot. I know I watched a couple of Americans talking about the price, and the price was about over $4 per liter, you know, and that's like the highest they've had in a very long time. I don't know if they've hit that before now. Yeah,
it is the highest they've had in an extremely long time. And of course, it's really affecting living standards, really affecting business activity across the country, which is, of course, having spillover effects for the rest of the world. As we know, the U.S. is king, and when things shake up there, it shakes up the rest of the world as well. So that's what we're definitely seeing happening.
So what about the efforts to get UAE into, you know, the West supply, get Saudi Arabia, and then I know that Germany and Qatar, they had an agreement some days ago. What about those efforts and agreements? They've not started yielding?
So no, the efforts have not really materialized yet. We do know that OPEC is keeping a really tight leash on their members. UAE has actually come out and said that it stands with OPEC fully in support of whatever OPEC chooses to do. So no, the deals and so on that we've seen have not fully materialized, and it remains to see whether they might actually materialize in the end, given the tight rein that OPEC has on its member states. Yeah.
So Russia is a member of OPEC Plus.
Yes.
Right.
Indeed.
So what do they have to do? OPEC Plus, a lot of the members of OPEC Plus are against what Russia is doing in Ukraine. What are they doing in that space about it?
Well, OPEC really isn't fully taking any major actions as far as we have seen against Russia, other than, shall I say, choosing not to raise its production levels and sticking to the same output plan that it had already.
The 400,000
barrels per day, exactly. So it remains to be seen whether OPEC might still take actions going forward. But what we do know that U.S. President Joe Biden is in Brussels today to speak with EU nations, and other NATO countries also. It remains to be seen whether more sanctions might be placed on Russia's crude and energy exports. So that might still help to push oil even further.
But as a member of OPEC Plus, doesn't OPEC Plus have a responsibility to also... A lot of people are ditching Russian oil.
Yeah.
Right. Doesn't OPEC Plus have a responsibility to also protect one of its own, which is Russia?
Which is Russia. Yeah, it is a very
That's a tight thing there.
I do believe that Total Energies has actually announced that it will be pulling out of Russia by end of 2022 at the latest. So we are seeing oil majors taking action against Russia. But then in terms of OPEC and OPEC Plus, it remains to be seen what they will actually do.
So I want to ask this. It's been on my mind for a while. I've not been able to get an answer to it. We have the UK saying they're going to cut ties with Russian oil and energy by the end of the year. What if the war ends today? What happens? I mean, do we just go back to business as it was before the war, or will they go ahead? What do you see them do? Will they go ahead, you know, and say, no, we don't want to deal with Russia anymore? And of course, there's a price to pay because energy costs in those countries, in Europe, in Germany, in UK, it's hitting the roof.
Yeah, so I do believe with the onset of this Russia-Ukraine crisis, the world has definitely undergone a tectonic shift. So I do not believe things will go back to business as usual, no matter what happens in the next coming months. So yeah, it still remains to be seen. We can't predict the future. But
what lessons do you think Nigeria has learned from this war?
Definitely not to make the world angry. I'd say that's the first thing. But yeah, definitely, I think Nigeria definitely has learned the benefits of diversifying its export revenue. So, yeah, exactly, of diversifying its export revenue and possibly maybe trying to cut down with subsidies, because we do know that the huge cost that the subsidies have brought has really been affecting Nigeria and, of course, the nation's fiscal position. So I do believe those are the key learning factors that Nigeria
but we can't say we have learned it except we start implementing it.
Exactly, exactly.
And then we see that the Naira has crashed to 590 in the midst of forex scarcity. The forex scarcity is not new, but is it getting worse?
Yeah, it is getting worse, especially with everything that's going on globally. We do know that diesel prices, of course, are on a tear globally, not just within Nigeria. In Nigeria, of course, we know trading somewhere between 750 to 800 Naira. And this is, of course, really affecting our transportation costs, which is, of course, also pushing up the prices of goods and services. I think it also really paints the it paints the picture that the inflation that we're currently seeing in Nigeria is, in fact, a cost push and not demand pull. And the only way that the government might be able to solve this cost push inflation, rather than traditional monetary policy increasing interest rates, is to find a way to boost supply. How are they going to boost supply? Make forex available for manufacturers.
Make forex available from where?
Exactly. External reserves right now about $39.58 billion or so. So I do believe we need to at least earmark maybe about $3 billion just for manufacturing imports, to allow manufacturers import the necessary goods that they have and boost supply and, of course, cool prices domestically. Yeah.
It sounds easy, but sometimes it feels like, I mean, I remember the other time we had the Eurobond and all of that. We had the SDR, and then we saw the reserve was up for a while, but it didn't seem to trickle down to manufacturers, the aviation sector, and all that. Maybe there are some stoppages in the system.
Yeah, there are definitely some stoppage. And also, one thing that is important, that what we have actually discussed now is actually a short-run solution. It's not going to solve issues in the long run. Long run will take serious combined efforts and a lot more to put into actually get that done. Yeah.
All right, and then I think we're still basking in the euphoria of the fertilizer.
Yes.
Dangote fertilizer. A lot of expectations from there.
A lot of expectations.
Yes,
exactly.
But I mean, let's look at it. Some people have said that Dangote is a commercial entity. They're here to make profits. So do we expect them, or because Dangote is here, fertilizer is just everywhere and accessible?
No, unfortunately not. Also, one thing that we should note in terms of the fertilizer thing is that fertilizer prices are high globally.
Yeah, I think it's the highest.
The highest
globally,
probably ever been. And like you said,
so
Dangote
it's a good time for Dangote, because Dangote will just...
So he can choose to export and reap more funds rather than selling domestically in Nigeria or fulfilling total domestic supply. So it remains to be seen what might actually come from that. But of course, we do expect it to reduce dependence on imports of fertilizer and hopefully increase agricultural output domestically.
How soon should we expect to feel the impact of this Dangote fertilizer plant?
Hopefully within a year at most. We should hopefully expect to see the impact of the plants within a year. I believe 3 million metric tons or so of annual capacity. That's huge, and that's really going to help the nation. Yeah.
And then there's a cash crunch, which has driven commodities. I think we've talked a lot about this natural gas. Natural gas is also another thing. I know this is one area that we say Nigeria has the potential, but we seem not to be tapping into, or we ought to be enjoying from this area.
Yeah, definitely. Natural gas production is definitely not where it should be. And we do hope that we will see things rise and improve as things go on. But in regards to what is currently happening with the commodity, or rather the commodity and cash crunch, commodity traders globally are being forced, rather banks are asking...
When you talk of commodities here, you're not talking of food commodities. You're talking...
Not just, let me actually elaborate. So natural gas, wheat and oil specifically.
Because you also have the aluminum, you have, the gold, you also have all of that as the commodities.
As commodities. So natural gas, wheat and oil specifically, banks and exchanges are actually asking commodity traders to bring out more money, or rather to stake more funds up front. And this is really causing liquidity to plunge in the global markets. And of course, when liquidity plunges, it leads to higher swings, higher margin calls, and of course, increased volatility, which is not good for prices.
And one of our staple food, I mean, if we're talking of commodities, we should know It will affect our staple food, rice. What's going on with that?
Rice. So in terms of rice, we do know that Kenyan farmers are actually quite happy right now. So rice imports, sorry, rather rice production in Kenya is expected to increase by 12% by as early as October, because they have finished building the Thiba Dam. So this Thiba Dam, which is about 1 kilometer long, I believe, is expected to boost the Muda irrigation system, which provides about 80% of production, rather irrigation for 80% of production that goes on in Kenya. So this is really going to help boost their rice production.
What about Nigeria? What's going on with our own production?
Well, I do believe the price of rice in Nigeria right now is about 32K, 32,000 naira. So in terms of rice production in Nigeria, it's, like we said, it's not where it should be. But we hope that things will get better in the meantime.
So what else is going on in the commodity space?
Like we said, I think the main thing, which we've already discussed, the main things, oil, what's happening in Russia, Ukraine, rice, and so on. So I do believe we hope to see prices cool off in the near term, although it looks unlikely. Yeah.
Well, let's be hopeful.
Yes.
I think and pray that something can just push it. There'll be one major driver that'll get it out.
Exactly. Yeah.
All right. Thank you so much, Longitude 4, analyst with Financial Derivatives Company. Thank you for sharing your thoughts with us.
Thank you for having me. Yeah.
We'll now move over to the market, and Will is standing by, I think, for the first time this week. I like to say, woo!
Ini, that reaction was spot on, like woo, but I think
you were expecting it.
I think you should just say woo, because it was quite mild.
Well,
So,
I mean, let's go all the way and be hopeful that it will dip in. The gains will dip in by the end of trading today, and then we'll end the week in a woo, woo, woo.
woo, woo. I'm just going to stay hopeful with you and optimistic with that regard. But trading equities market was positive, as you saw yesterday, making a U-turn from the negative performance we've seen now since Friday. We've had negative trend. And remember last week, we only had one positive session out of 5 sessions, 4 down. And that's really not good for the market. Now, the all-share index recorded a 0.02% gain yesterday. Quite flattish to close at 47,163.94 points. The investors' interest in Access Bank, we saw Access Bank, Cornwall, and Lafarge supporting market performance yesterday amid the sell-offs that's still, persistent in the market. Now, this impacted, however, the bond-to-date gain. Well, it's still in the negative, and the year-to-date return is still moderating. It's still at 10% level. Now, total volume traded yesterday declined by about 11.9% to 267.49 billion units, well, it was valued at 3.23 billion naira and transacted in 4,100 deals. Analyzing by sectors, banking, oil and gas, industrial indexes posted gains. Consumer goods was unchanged, while insurance index declined. Mixed market breadth yesterday, but we have Abdulaziz Bakare is a senior investment analyst at Main Street Capital to tell us what's going on there. Good morning, Abdulaziz.
Good morning.
Now, Abdulaziz, we've seen a mild rebound in the NGX after, trading in a negative territory for 4 straight days. Now, is there something driving this in particular, and can this be sustained?
Okay, thank you very much for having me. So, looking at the Nigerian equities market performance yesterday, I would say the 0.02% was marginal. And this is largely due to investors positioning for dividend. So if you look at the banking sector, yesterday we saw a 0.25% increase in its performance yesterday. So a lot of investors have been positioning for dividends since the start of the year till now. And the likes of GTCO is going to go ex-div today. So yesterday we didn't see much of activity in that stock. Also, Zenith Bank will be going ex-div tomorrow. So we'll most likely not be seeing a lot of activities. Hence why we saw that marginal uptick. If you strip that off, you would see that the market is going to just continue that bearish performance. But just because of this dividend, that's why we're just seeing that bit of break, I would say, in the overall market performance.
So you're saying now that investors are just positioning, for the dividend, payout that's going to take, like it's going to happen for GTCO and Zenith Bank. Now, so what's the opening call in the market this morning? What are we seeing? What numbers are rolling in?
Okay, So looking at the market this morning, we've not really seen a lot of activities yet. However, we expect that we would see a bit of pickup in market activities. But just looking at the banking sector generally, because that's where we would expect some activities to pick up. We won't really see a lot going on in PTCU. We won't see a lot going on in Zenith Bank, but the likes of Fidelity Bank, we saw what happened yesterday in Fidelity Bank, touched 52-week high. We expect that that driver, or we expect that that sentiment will continue today. It has currently broken the 52-week resistance that we've seen since that was last year, 2021. And we expect that stock to continue driving or continue trending upwards. And I'll tell you why. So just looking at the fundamentals, Fidelity has a very good cost of fund and also a very good CASA mix. So we'd expect that with the strategy of growing their loan books over 2022, we will expect that Fidelity Bank will continue to go upwards. Also for other tier 2 names as well. But aside this, I don't really see much activity happening in the banking sector today, and that was supposed to drive the market.
So you mentioned some stocks in the banking sector, but there's no stock standing out for you in the oil and gas sector, consumer goods, industrial sectors as well?
Okay, so for the oil and gas, thank you very much for that question. So for the oil and gas space, I would like to talk about Seplat. So look at what's going on in the global oil price. We are seeing that rally in Brent crude and also WTI. So Seplat currently in that trading in that space is, as you know, Seplat is an upstream oil and gas company, and we expect whatever is going on in the global space will surely be reflecting in the stock price. So, but surprisingly, it's kind of doing the opposite. So Seplat surged around 1,038 so far, the highest this year, and currently is at 886. So I will attribute that to profit taking. I expect that the stock would continue to rebound. So right now, it's just giving an opportunity for investors to come in. So it's advisable to even go for Seplat right now at 886 naira. I expect it to continue the uptrend.
Okay. So next week, is there any outlook? Do you have the same sentiment for this week going into next week, or should we expect something different? Is there anything going to happen that's going to stand out in the market?
Okay, so I'll just talk about the overall view of the Nigerian securities market. So you agree with me that we have a negative correlation between the equities market and the fixed income market. So right now in the fixed income market, interest rate environments are kind of trending downwards. Just looking at what happened in the FGM bond auction and also the NTB. So we have an outlook at MCL. We expect interest rate environment to tick higher, judging by several factors, the likes of inflation, the likes of FGM borrowings. So before that happens, we expect that the Nigerian equities markets will continue to trade sideways. Then when yields start to trend upwards, then we start to see Nigerian equity market give up significant chunk of its gains. So that's really our expectation. So coming next week, we expect this sentiment that's currently going on to continue in the market.
Thank you so much. With that and the packing flow that has come in, we expect liquidity to be boosted in the market as well. Thank you so much, Abdulaziz Bakari, Senior Investment Analyst at Main Street Capital. So, Ini, as you mentioned, well, we're seeing some bullish, sentiments a bit mixed in the fixed income space. We're expecting that to probably continue, as analysts expect that to continue in today's trading session as well. And also, the NASD market, I forgot to mention that rebounded yesterday as well.
Yeah, it was. I think it was unchanged for like 3 days.
Yes, it's remained. It was
like there was nothing at all happening
going on
in that
the NASD
market.
space, the unlisted market. But yesterday it's up 0.09%, and we're hoping that maybe there will be a
mild also, but at least a movement.
It's a movement. It's a movement in the right direction, I would say. So that's what we have for the markets, and we're hoping that we'll see some positive outlook today as well, and for next week.
Yeah, we'll be keeping our fingers crossed and looking out for that. Thank you so much, Will. Let's head to London now. The highest inflation in 3 decades in the UK, with a 5p a litre cut in fuel duty and a £3,000 increase in the threshold for national insurance contribution. These are generating a lot of reaction from the British. We have Juliana now to join us and tell us what they are saying. Hello, Juliana. Good morning. What are you guys talking about all of this?
Yeah, good morning, Annie. Well, 24 hours ago, we had that pretty startling data, didn't we, from the Office for National Statistics showing that inflation had jumped by 7 percentage points to 6.2% in February, which put the Chancellor under a lot of pressure to produce a miracle, really, at his spring statement. It was supposed to be a spring statement, but it turned into a mini budget, and that's just because of the unperilous times we find ourselves in this country. Not only is inflation rising, the cost of gas, electricity, fuel, and also food is the main topic of concern. There was, apparently, according to the Treasury, an £18 billion giveaway yesterday. We didn't really feel it. I suppose the main topics, of course, are the 5p cut from fuel duty, which in this country, I believe, is at about 63 pence. So that's gone down to about 58 pence per litre. Is that good for motorists? Not really. A lot of people that have been speaking out on social media and on the news channels just don't think that really goes enough. What's 5p per litre going to do? Somebody put it all together in a spreadsheet, and that means really it's taking away a week's worth of the extramental increase in petrol and diesel. And then again, it's really important to mention that not everybody drives in this country. People are feeling the pinch, not just when they're putting petrol or diesel in their car. They're also feeling it in the shops, in business. A lot of business leaders not really happy. They don't think this particular Chancellor, Rishi Sunak, is doing enough to help businesses during this time. And then away from petrol, another big announcement yesterday was this national insurance threshold, which has risen from about £9,000 to about £12,000. So that was £3,000 increase. So if you earn any, you don't get taxed on your income until you're earning more than £13,000. So for some people, that's great. And if you are somebody that falls into that bracket, you will feel some benefits there. But there are millions of individuals that don't earn that at all. They're on a universal credit, they're on disability allowance, they're on all of these other government schemes, and none of these schemes have had an increase. So the less privileged in this country are still going to be less well off. And of course, in a couple of weeks' time, we still have that national insurance tax increase, which he didn't budge on. That money, 12.5 billion, is going to be going towards national, the NHS and social care. And again, we've got the energy regulator, Ofgem, increasing bills. So the Chancellor at the moment is doing his rounds on British TV, trying to justify a pretty poor spring statement.
Yeah, well, Juliana, as you said, there seems a miracle is what you need here now, you know, to get positive comments from British at this time. But in other stories, a post-Brexit free trade deal with the United States hit the rock yesterday. I learned it's connected to a 25% tariff on British steel. Could you tell us about that?
Yeah, that's right. So if you cast your mind back, Innie, to 2018, where former US President Donald Trump was in a big spat with the EU and, in some aspects, with Britain because of this levy that these nations wanted to put on the big tech firms who for so long was making so much money in countries like the United Kingdom and in France and elsewhere, but just not paying enough tax. So they were proposing this levy, and in retaliation, Donald Trump decided to stick a 25% tax tariff on steel imports and on aluminium imports of 10%. And now the Biden administration have actually scrapped that, scrapped it for the EU. That was scrapped at the beginning of the year. It will be scrapped for the UK in June, and it will be scrapped for Japan next month. And during these discussions, the Treasury were asked about this huge, big trade deal, this free trade deal, which has been on the cards since Brexit. And they were basically honest in saying, is it worth the blood, sweat and tears? We don't know. The way the World Trade Organization works and the kind of legislations that are in place at the moment are very 20th century, that countries have moved on. So they weren't ruling it out, but they did say it is going to take a very, very long time to get there. But Prime Minister Boris Johnson and the Trade Secretary are very interested in getting there, of course. Why would you not want a free trade agreement with the world's largest economy? However, Joe Biden has been very strong, saying that if this Northern Ireland Protocol is still going to be in a mess, he doesn't want to have anything to do or have any conversations about a free trade deal. So let's see how it goes. But it's certainly not on the cards now, but negotiations will begin soon.
All right, Juliana, thank you so much for that update. We'll have other issues to discuss at 1:30 during Business Incorporated.
Yeah.
Let's move over to the crypto space now with Ladi. Ladi, how's the market?
The market is looking quite bullish this morning. Looking at the sentiment right now, as the fear greed index, we're at 40 at this morning, 40 over 100. That's fear. There's still fear in the market, but you know we've been in extreme fear for a while now. But this is an upgrade.
It's higher than we've been in quite a while.
Yeah, so now it's getting to that neutral point, which is about 50. Then when it crosses 50, we're looking at greed. And that's where you need to start reevaluating your portfolio. Well, market cap, $1.96 trillion. That's up 2.80%. We see a huge volume there this morning, $100 billion traded in the total crypto space. That's Bitcoin plus altcoins up 14.95%. Bitcoin dominance, 41.75% this morning. We see a price of Bitcoin of $42,992 this morning. It's up about 2.16%. Volume trade at $26.72 billion. So Bitcoin is getting to that breakout territory at this point. The Ethereum there reclaiming the $3,000 mark this morning. It's up 3.20%. Volume traded at $17.39 billion. If we look at top of market cap, it's all green on the counter. All right, let's bring in Bjorn Martins right there now, CEO Passive Income Token. Hello, Bjorn.
Hello, good morning.
Good morning, Bjorn. Great to have you. Well, in 2021, it's all about play to earn, NFTs, but that's still, happening right here in 2022. And, I know you're big on metabots at this time, but tell me, Bjorn, making money from while playing games, what is required of me?
What is required from you? Really good question. It's not as easy as everybody thinks. You cannot just play the game and earn money. There's always an initial investment needed. Like also everybody knows with Axie Infinity, you need to collect a certain amount of NFTs to be able to play with. And with these NFTs, then again, you can play the game and earn money while playing. In the meantime, also these NFTs can gain in value where you can earn on top of again as well. I have to say, though, these earning mechanisms are more interesting for the third world countries where the wages are a little bit lower than in the Western countries, for example, where 300 to 400 euros a month is sustainable income. And for these countries, it's very interesting in playing these games where playing a game can even earn them more money than a normal day job.
All right, but, do I have to bring in some money? Now, looking at metabots there, do I have to bring in some tokens to actually be able to make money on the in the metabots ecosystem?
No, you don't have to, but it is the fastest way to do it basically. But you could also just start by playing the game, joining the game, the metaverse, looking around, and search for the Easter eggs, search for the places where you can find things that are for free, and eventually you will be able to collect your own robot and start really playing the game and earn proper money from playing the game. So we really try to keep the entry level very low for people so everybody is welcome in the game.
Very interesting. And I know most of these play to earn games have NFTs. They have NFTs in the ecosystem, and I'm wondering, how do you make money? How do you value these NFTs? They're mostly like collectibles.
So as back in the days when we had normal games where there were no NFTs involved, a skin, a weapon, everything could be copied, multiplied, and it wasn't really any valuable. But now these days with NFTs, they are non-fungible, so there's only one of each, and this gives them already an increase in value as they are exclusive. But also different rarities. For example, one part can be more valuable, have better stats inside of the game than the other part, but again gives them better valuation on the market.
Right, so I can make money by playing the games and also collecting NFTs and hoping they go up in value somehow. That's right?
Yes, they're welcome in 2022.
Interesting times. All right, Bjorn, thank you so much. Always great to talk to you.
Thank you, Ladi. Have a good day. Bye-bye.
You too. All right, so talking about the top alts by market cap, there we see Cardano there having a massive boost. They're 15% up this morning, crossed the $1 mark and now trading at $1.10 this morning. We see the Cardano blockchain doing pretty well. A lot of projects being built on Cardano this time, and we're seeing a lot of demand for the tokens. Solana there, $96, trying to get above $100, up 5.75%. And top gainers, we see Loopring topping that counter up 30% this morning. So, Ini, I don't know if you play games, but if you want to play games at this time, maybe you can make some money.
Yeah, why not make money while having fun?
Exactly.
What do you stand to lose?
Exactly. Maybe lose the time.
Well, it's good to see the market rebounding, but remember tomorrow is Friday.
Oh, yes.
Basically a red day. But
yes, we're used to seeing, sell-offs
let's not get
Fridays,
used to it.
but
let's not get
hopefully
used to it.
that changes
yes,
this
let's
Friday.
Hope tomorrow will be different.
Yeah.
Thank you so much, Ladi.
Thank you.
Well, that's it on the show. I have to say thank you so much for being a part of it. We'll do it again tomorrow, but at 1:30, we'll do Business Incorporated, where you get stories from the African scene and, of course, outside Africa. Coming from business, I'm Ini John Mekwa. Enjoy the rest of your day.